up the pack. So now you could be.
Yo, 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 yo. It is your boy, the insurance junkie, your fiduciary fella, the all-star advisor, Alonzo Hall. And today I've come to weapon tap on your head with a brief little cash commandment and obviously an ADH wealth solution. Before I go in, ladies and gentlemen, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth, to purchase life insurance directly up to $1 million with an instant decision and no medical exam, or to schedule a one-on-one appointment with a licensed financial professional. The links are in the description. So bear with me while I play some of my favorite tunes, because you know I like to have my tunes on. And then we will get it going. Did my soundbar go off? No, it's still on. Malika, how are you then, madam? I am here today, and I'm going to weapon tap on our heads with a brief like I said, wealth solution. So what I want to do actually is probably give 1 to 2 minutes to let people roll in. But since you're here, Malika, thank you for showing up. I appreciate it. And bear with me 1 second. I did not mean to share that screen just yet. And I'm going to do it like so. So, yeah, and I got to actually text you again. I'll text you the phone numbers and all that good stuff. Hopefully, they're done with their website by tomorrow so I can finish everything up for you. Other than that, I still got to beat up and bully some guys into getting married. But now it's been 2 minutes. So again, salute, 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 salute. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor, Alonzo Hall, and I'm going to weapon tap on your head with a cash commandment. Now, this cash commandment is teaching people how to prepare for a life insurance review. You see, it's something that happens all too often. Generally, you'll get approached by an insurance agent, and they'll ask you if you have life insurance, and you'll say, yes, I have it. And newer agents or inexperienced brokers will go ahead and be like, oh, okay, fine. Now, someone who's a little more savvy, understands how the business works, realizes that there's a couple of ways you can go with that. For example, one thing that I'll say is, okay, great. So you've taken care of dying too soon. What about living too long? Then that pops into people's head. Well, what do you mean? What is that? That's your opportunity to offer someone an annuity, which is an IRA or an individual retirement account, right? Now, there's another thing you can do. The other question someone will ask you is, well, when's the last time you've had a review? Now, most people will say something astronomically of a lie like, oh, last week. And unfortunately, that's not true, right? Most of the time, people aren't going ahead and having that review. However, there's a reason you should do a review. Couple reasons why. Number one, the laws change every 2 years. What do I mean when I say the laws change every 2 years? So firstly, tax code changes every 2 years. So the way that your investments, your insurance, your retirement accounts are set up may be differently affected because 2 years ago, there was a different president. And so they had different rules for the tax code. For example, you'll probably hear a lot of brokers or even financial advisors running around talking about IRC 7702, which is Internal Revenue Code 7702. It's not new by any means, but it's something that they've taught a lot of us to sell on in these recent years. Okay? And my phone is going off. Bear with me. So there is, again, IRC 7702, which has been around for decades, but it's a selling point, and a lot of consumers are unaware of it. Now, IRC 7702 has been affected greatly because, some things have gone on. Good evening again, Malika. Salute, Sheed. How we doing, brother? So what are those things that have been affected? Well, briefly, the tax code had been affected because of some changes that Donald Trump made. So as of January 1, 2022, insurance companies have now increased their price and slashed what you, the consumer, gets as a percentage rate of benefit. Now, I'm one who likes to underpromise and overdeliver. So what I was selling on was a 2% interest rate. However, we were actually growing at a compound interest rate of 4%. But due to IRC 7702, we've been slashed down to 3%. Now, some things also change every 2 years. Every 2 years, your financial professional has to go back to what's called continuing education. So we have to relearn things every 2 years. This is why you'll see that 95% of the people who actually get into this business, either financial services, flat out insurance, or real estate, don't last past 2 years. So I've spoken to many people, even when I had my real estate license active. I talked to them about real estate or insurance. Oh, I had my license. I know. No, listen, you know what it was like 30 years ago when you were licensed. If you didn't continue with continuing education, you're not being up to date on the new rules, regulations, laws, and changes. I actually just had to update my mentor on the fact that you could do what's called a limited pay IUL. In fact, I actually had a situation where I was sitting with a client and I had my principal on with me, and he actually had to remind me of something called the best of both worlds, which is a term and a permanent insurance policy that are combined into one. So instead of me getting a bonus by selling you, several different policies, you end up getting more of the benefit, because instead of this policy, that policy, this policy, that policy, it's all put into one. And the whole goal of a financial professional, especially a fiduciary, is to find out the best ways to help you. The way that I like to look at it, I tell my clients this: you're gonna make me rich. However, the only way I get to be rich is if what I recommend for you benefits you more than you making me rich. And the laws are set up so that that stands true, especially if you're licensed in New York State. So now, I'm going to go ahead and get into why it's also another reason that's great to review. Well, what's another great reason to review? Is because every year something else changes, right? Last year I was 36. Last year I turned 37. This year I'll be turning 38. Next year I'll be 39, and the following year I'll be 40. So every year my age goes up. Also, things like having kids, right? Well, that changes things. So you want to do reviews often. 2 years ago, a gallon of milk wasn't the same cost that it is today. 2 years ago, gas wasn't what it costs today. So I'm going to stop running my mouth. This is going to be a brief live because I want people to be able to come back and consume it. I'm going to start doing those hours-long lives as well. My longest was 7 hours. I probably won't do one that long. Hey, Gail, how are you? So now I'm going to go ahead and share this with us. And we're going to look at prepping for a life insurance review. I'm actually going to increase the screen. And this is something that is from my company, Emeritus. Like I said, that's one of my favorite carriers. I do represent a few others, but this one seems to, for price and product, be the most relatable to most Americans. So, preparing for a life insurance review. A review of your life insurance coverage does not automatically mean you will need to buy more. A review may reveal that you are on track to meet your objectives or that you have too much coverage. It may also identify ways to provide coverage more cost effectively or highlight discrepancies between your current coverage and goals. Prime example, Sheed, I'm probably going to need to do another review with you, brother, because you've been mentioning to me. Yeah, make sure y'all hit that like as soon as y'all enter, please. Sheed, you've been mentioning to me that you want a specific number of coverage. Now, when we first talked and we went over the review, I was basically like, really, you don't need more. But as things are changing, especially because you're doing more deals, your business is growing, you actually may need that more coverage, especially for the fact that you've got some things going on in the back that, we haven't talked in a while. So I might not be completely aware of everything that you've got going on. Now, with experience and knowledge, a financial professional can be a valuable asset through this important process. So, you want to review this checklist to prepare for your meeting. And anyone, I'm willing to send you a copy of this. If you would like a copy of this, if you're watching live or if you're watching in the playback, leave me a comment with your email address, or you can email me with your email. And in the email, simply put life insurance review worksheet. And I'll go ahead and make sure to send a copy of this to you. And let me put my email across so that you guys are aware of that. And I'll have to create a new banner for that. So it is how is this not create banner? At cgwealth.financial. There we go. All right. So there goes that email address in the event that anybody wants to email. Oh, whoa, hold on. I don't have Gail up here as a mod. You know what, Gail? Hold on. Give me 1 second, please. Because everywhere you go, you are like an extreme moderator. And once I start going live more consistently, I'll definitely need you to mod for me. And I have no problem, taking care of whatever I need to take care of to make sure that we get you right. You know what's funny? I didn't like my own stream. I should probably do that, huh? At any rate, let me go ahead and do this. And Gail, we want to see you going live, especially because you've got that wonderful name of Gail. And like I said, that's both my mother and my grandmother's name. All right, there we go. So I believe I added you as a moderator. And so you're set up there. And salute to Sheed, because Sheed has been putting my name out in these streets. Something wonderful. I promise you, this man promotes. And why? Because number one, he said it was like a godsend that I had come across, because he had been talking about life insurance prior. But to have someone actually speak it and know what we're doing and just be a junkie about it, I guess kind of helped him there. So we're going to review this checklist before you prepare for your meeting. Now, if your goal is income protection, is the death benefit large enough for your family to maintain their current standard of living or to ensure the successful continuation of your business? If your goal is estate protection, would your death benefit cover any estate taxes or wealth transfer needs? Lastly, is that protection actually still needed? Do you actually still need all of that protection? Now, this can vary greatly if you have a permanent policy or if you have a term policy, right? And the reason it can vary, because if you have a term policy, well, if you've outgrown the need for that term policy, then yeah, you probably don't need that protection. Permanent policies are not just for protection of a death benefit, but they're also for accumulation. It really depends on what you and your financial professional have discussed. Now, let's take a look at cost. How much are you paying for your life insurance coverage, right? Because a lot of people don't understand, sometimes the prices change, and not only do the prices change, but just about once every quarter or once every 3 months, all insurance companies will adjust their percentage rates. Now, what do I mean by the percentage rate? Remember, I told you, generally it's a fixed 4% interest rate. But when you're looking at variable universal life insurance, indexed universal life insurance, and regular universal life insurance, they're going to have higher interest rate growth than a regular whole life insurance. And those policies can adjust their interest rate. Prime example, the current interest rate at Emeritus for an IUL is 5.97%. It was 5.87% a couple of months ago, and it was 6.9% a couple of years ago. So it varies, and sometimes that changes. That's also why sometimes thinking about it may not be in your best interest. Also, when you're talking to your professional, thinking about it, realize that you're not the only one who has to think about it. The insurance company is thinking about if they're going to issue this to you. So it can take anywhere from 2 to 8 weeks for them to think about it. So the longer you think about it, the more money you're costing yourself. Imagine this. If somebody, like a lot of people enjoy investing in crypto, right? They tell you to buy the dip. There's a reason they tell you to buy the dip today, because tomorrow, even though people invested in crypto and crypto in November just got slashed in half, there's a lot of people who are like, buy the dip, HODL, hold on for dear life, because tomorrow it could go from cut in half back up to 75,000 per coin. So that's why you want to make those decisions kind of swiftly. So, can protection be provided more economically? Again, am I paying too many dollars for my premium? Things like your health can change, right? So your rate class may change, right? Because the life insurance isn't solely based on how much you're paying. There's things like your age, your height, your weight, your family health history. If you use tobacco, stuff like if you smoke weed, if you fly an airplane, all of these things factor into your premium. So you want to be very cognizant of things like that. Rob, what's going on, bro? Okay, so now, would your rate class and your premium improve if you were underwritten now? Perhaps your medications have changed, or you lost weight, or you quit using tobacco. Those are some things that can actually make a change in your premium. Prime example, a tobacco user, let's say you have two men who are the exact same age, height, weight, and completely exact same health conditions, except one uses tobacco and the other doesn't. Do you know the one that uses tobacco is going to pay 3 times as much as the one who does not pay tobacco, use tobacco, for the simple fact that he uses tobacco? Tobacco triples your price. So if somebody paid $1,000 a month as a non-tobacco user, he's going to pay $3,000 a month because he likes those Newports. So you want to look at your ownership and beneficiaries. Is the ownership of your policy structured to best fit your estate planning or your business needs? Now, what do I mean when I say ownership? Well, there's different ways you can have the ownership of a policy. Prime example, my godson, who I purchased the juvenile life insurance policy on him when he was born in 2012. Even though we're paying, me and my wife, for the policy, we don't own it. It's actually owned by his parents. Now, do they know this? I'm sure they don't quite understand yet that they own the policy. So any changes that need to be made to that policy, I cannot call the insurance company and make them make those changes. You know who has to do that? The owner of the policy, which is the parent. And that's crazy, right? Now, are your beneficiary designations up to date? Now, that's a very important one, right? I was actually talking to my principal, Charles, today, and he did a review with a guy who had a bitter divorce. And this guy was so bitter with him and his ex-wife, and he was like, they wanted to destroy each other. And this guy was like, yeah, I hate my ex-wife, blah, blah, blah. When he reviewed this guy's retirement accounts, he was like, oh, you hate your ex-wife? Yeah. Okay, well, you have her as the beneficiary on your pension. So when you retire, or if you die before you retire, she's going to get all that money, not your current girlfriend or soon-to-be wife, but your ex-wife. That's why you want to do that review, right? Because things change. Now, Lastly, with ownership and beneficiaries, you want to make sure that all of your intentions are addressed. What do I mean by that? That means that when you're sitting with that financial professional, you don't want to just say, yeah, I look for some life insurance because, if I die, I want to leave some people some money. If that's all you want, you're going to end up with an order taker. You're going to end up with a terrible policy. It's not going to benefit you. Now, if you talk with that advisor or that financial professional, they should try and help you, guide you towards things. So they should ask you questions like, what are some of your hobbies? What do you like? Who do you care about? Things like that. So they can try and uncover some things that can help you. So next, we're going to be looking at the type of policy. So is the type of policy you have meeting your objectives? So do you have a term life? Do you have a whole life? Do you have a universal life? I'll give you an example. A few years ago, Absalom Pianki, what's going on, man? AP, you know what I'm saying? When I was sitting with a gentleman back in 2013, it was a gentleman in the Bronx on Narrett Ave. He was a 65-year-old man who had a 40-year-old wife. And he said, I seen a remarried guy who died with $200,000 and his ex-wife cashed out. Yeah, because that happens. And without a beneficiary review, it's going to happen like that. So this guy, he had a variable universal life insurance policy, which means that all of his premiums and all of his death benefit were at risk in the stock market. When he called me, he was pissed. He was like, I don't like it. The stock market is getting beat up and now I don't have any life insurance. We changed that policy from a variable universal life to a regular whole life because he wanted to make sure, besides all the other, because he had over $1 million of life insurance besides that variable universal life. And he was a retired detective that had his own private investigation company in the Bronx. And he decided, I want to leave my wife $25,000 a year for 10 years when I die. Give me another $250,000 policy, but make it a regular whole life. And that's how that worked. Now, if you do have term insurance, what will you do at the end of your term? Can your policy be converted to permanent insurance? And when do you have the ability to convert? Now, Emeritus is a company that does not offer something called ROP, Return of Premium, which if you're going to get a term policy, I generally, personally, and again, every agent's going to have their own bias, but I personally feel if you're going to get a term policy, you might as well get an ROP, which is return of premium. So what does that mean? Well, a return of premium is a little more expensive than a regular term policy. However, with that return of premium policy, what you're going to be able to do is at the end of your term, when you're done, the insurance company doesn't just say, hey, Mr. Smith, thanks for getting that life insurance with us. Sorry you didn't die over the course of the last 19 years, so your family doesn't get this $1 million that you promised them. But thanks for your money. Deuces, unless you want to keep the policy, which in that case, you can keep it, but it's going to cost you every month what it used to cost you per year to pay. Or you can get a return of premium and they'll say, hey, Mr. Smith, thanks for not dying over the course of the last 19 years. Thanks for allowing us to get your money and invest it and earn interest off of it in our assets under management. You're done with your term insurance. You can keep it and pay per month what you would pay per year. Or, since the term is up, here's all the money that you paid into it back. Now, supplementary benefits. So this is funny because there's a gentleman by the name of Mr. Real Estate out here who actually works on supplementary benefits. And supplementary benefits are actually what in my field we call health insurance, right? When most consumers think of health insurance, you think of what we call major medical, which is where you go to the doctor and you pay a copay. But health insurance is things like critical illness, long-term care, hospital indemnity, dental insurance, vision insurance, even things like an accidental death and dismemberment. Now, there's also things you can get on your permanent policies like living benefits, which are supplementary benefits. So you can actually get living benefits, which will handle you for chronic illness, critical illness, or a terminal illness. I'll discuss that in a later video. Are there any new options that might be helpful? Again, every 2 years, products are changing. Every couple of years, insurance companies will remove a product and add a product. They'll change things. Prime example, Prudential used to have, they used to offer to brokers a final expense policy. They no longer have that. Mutual of Omaha used to offer to brokers a final expense policy. Now you can only offer that final expense policy if you're a captive agent and all you sell is Mutual of Omaha. But there's other carriers that offer those. And then even those policies have multitude of different options. So then you're going to look at cash value and performance. So, is the performance of your permanent policy meeting your expectations? Remember, like I said, this gentleman who was in the Bronx and he had a variable universal life, he was highly upset because it wasn't performing to his expectations. You see, he bought it in 2008 when the market was down, when the real estate market was down, but at the time, the separate account was invested in a lot of REITs. So REITs were actually good for investment companies because you had a lot of poor performing mortgages. And what's happening when you have those mortgage-backed securities, they actually lump them in what's called A brackets all the way up to Z brackets. And the Z brackets are the mortgages that they know are subprime, people who are less likely to pay it back. And when people default on your mortgage, if you're invested in the mortgage-backed security, you're going to make money when they don't pay their mortgage. So if they're an A quality, it's very cheap to invest in an A quality because it's likely that you're not going to make much off of it. But a Z quality is going to be a lot more expensive because they're likely to default on their loan and you're going to make a boatload of money. The next thing is, does your policy have enough cash value to sustain it as long as the need exists or to meet your other goals? Now, you may or may not have heard of an agent saying, the policy may fall apart. So that's what that means when they say, hey, is the cash value actually there long enough to allow for your policy to exist? What will happen is oftentimes, especially with things like the infinite banking concept, agents will underfund your policy, right? And there's different ways that you can actually manipulate the illustration software and manipulate the policy to be beneficial for a client. I think, Malika, if you don't mind, I think you saw that in action with myself and Charles. We actually sat and showed her some things, and hopefully she appreciated it. Just like actually with she, I did the same thing, and we manipulated the policy so that it was in a position that is most advantageous for him, right? And again, this is why I like doing things so it's more advantageous for you, the client. Because what happens when I do things that are advantageous for you, the client, you get results like people like Sheed, people like Ra, people like Malika, people like Absalom Pianki, who run around everywhere and be like, y'all need to go see this man. Y'all need to go see this man. Y'all need to go see this man. So I'd rather make sure that you benefit, because when you benefit, I benefit. How do I benefit? Word of mouth, because you're going to tell somebody. I always say, tell a friend to tell a friend about me. In my email, I always say, I appreciate your help in helping others. If you found some value in the time we spent together, please help me help others by introducing me to somebody who can benefit from it. So I'm getting ready to wrap up briefly, but I want to go ahead and show you here that a review really may be important for you in these circumstances. Give me 1 second. She says, I totally appreciated it. And you and Charles were awesome. Well, thank you. Oh, you know what? I'm now over 500 followers. So I think in the next couple of days, I'll also be making a video about the Brunch and Wealth. And I'll be posting that in the community tab. It'll be a lot easier for guys to find that and register. And this particular brunch and wealth that we're doing this month is going to be very, very epic. We're not only going to be talking about, which Rael is saying here, estate planning is the only language we need to be talking about with our families and significant others. That's it. Everything else is a distraction. Exactly, because estate planning is going to be where you'll be able to have fun. I just posted on my Instagram, DMX. Yes, get at me, dog. When he passed, he left, his estate is at negative $1 million. So that means his estate, when they liquidate all his assets, his family now owes his creditors and his debtors, his creditors or his debtees, $1 million. And this is a guy who obviously made millions of dollars, and yet he's in that situation. That's kind of scary, right? And yet we, as a people, many Americans, but there's a statistic that shows that 92% of African Americans, this is probably millennials and under, don't have life insurance. Now, I find that to be very untrue. What I find to be true is that the majority of African Americans who have life insurance, because there is a Yahoo Finance article that shows African Americans believe in the power of life insurance for passing on generational wealth. The very big problem is you have agents and corporations who prey on us, and they prey on the they prey on the fact that we don't know certain things, right? And when they prey on that, they come to you, buy term, invest the rest. Or they come to you, come do infinite banking. I'm always talking about infinite banking. I'm a huge fan of infinite banking, but I also know what I'm doing when it comes to infinite banking. So I'm not going to put you in a position where you're worse off. A lot of agents don't, unfortunately, get trained properly. And then they come to you and they put you in a worse position. You think you're great because you have a life insurance policy. I'll give you one example. My uncle currently has HIV. And he's uninsurable except for a final expense policy. But when he went to the bank to try and get a life insurance policy, do you know what they offered him? They offered him an accidental death and dismemberment. Basically, you need to get hit by a bus in order for an accidental death and dismemberment to pay out. So I explained to him, that's not the type of policy you want. You need a final expense, which is something called guaranteed issue. Now, you'll also hear people speak against whole life, but not all whole life is the same. A guaranteed issue, or like Colonial Penn policy, is whole life insurance. And it does build cash value, but nowhere near even a traditional cash value or traditional whole life insurance policy would a final expense work. Okay? And thank you for shooting that Instagram. I'm also going to be trying to get all the other social media. My niece is telling me I need to get on TikTok and Twitter and I think Pinterest and all that stuff. So I'm going to go ahead and get to doing that. So, while regular reviews are important for everyone, certain life events generate a stronger need to evaluate your coverage. Number one, the birth or adoption of a child. You need to review your coverage. A marriage, a divorce, or a death of a spouse. You definitely need to review your coverage. Starting a business or changes in leadership of your existing business, that you definitely need to do a review. Now, why would you need to do a review if you're starting a business or changing your business? Well, again, the wealthy insure one life 7 times. I'll give you an example. My godson has a life insurance policy from birth. That's one. Now, many people will be like, I've spoken to people. No, my mom got something for me. I'm good. And these are grown men. Now, they wouldn't let their mom pick their girlfriend. They wouldn't let their mom pick what they wear. They won't let their mom pick what they eat. They won't let their mom tell them where to live. They won't let their mom tell them what car to drive. They won't let their mom tell them what job to work, but they'll let their mom dictate their financial future and what they're passing on as a legacy. Now let's look at that. That's also backwards because we're most of the time intending to have our parents die before us. So why would I leave my financial legacy in the hands of my mama and not know what she's doing? Because just because your mama had that policy, she may cancel it. A lot of people don't understand the value of especially cash value life insurance, and they don't look at it as an asset. They look at it as a bill. What if I told you can actually qualify for a loan with a life insurance policy? It's something called collateral assignment. Now, with a business, there's something called a buy-sell agreement. So you're actually covering both parts of the business or both business entities with a life insurance policy. You're covering your business exit strategy. That may be why you would review if you're starting a business. You definitely need to review if you're buying a home. Prime example, my brother in Miami. He did some boneheaded mess. Well, what did he do? He talked to me about getting a life insurance. So I quoted him on a way to protect not only his mortgage, but also to use that life insurance policy as a way to go ahead and bolster his retirement. Give me 1 second. Let me share this to my Facebook. Now that I'm talking about my family, I am the type who, if I talk about you, I'll talk about you to your face. So now I want to make sure that my family is aware of this. And in fact, I'm going to start tagging people on the I'm not going to tag them on the Facebook post, but now it's on Facebook too. But what he decided to do was think about it with his life insurance. This was 5 months ago. This is why my license in Florida is not active, because he wanted to think about it. And I was like, okay, well, while you think about it 5 months ago, I'm not going to go ahead and pay the fee for this license, because I don't pay the fee unless I know you're a serious client. So he wanted to think about it. Now, while he's thinking about it, he went and bought a car, causing him more payment. Well, you know what? He was thinking about it, but he immediately had to get car insurance. So God forbid he died last night. Well, that $400,000 townhouse that he has in Coral Gables, Florida, is going to be in the lurch because his wife can't afford that mortgage by herself, and he can't afford the mortgage by himself. They're working together, paying the mortgage together. And see, worker, what's going on, brother? How are you? So God forbid he died last night. How is his wife going to pay that mortgage? She's not. So she's going to lose that home. But hey, bro, you got a new car. Hey, bro, you thought about it. And while you were thinking about it again, just because you're thinking about it, the insurance company is thinking about it as well. And they're going to go into a lot of different information. That's why you sign those HIPAA forms. You'll also probably, when you close on a home, you don't know it, but you do sign something saying that you're interested in income protection. Income protection meaning life insurance and what I call paycheck insurance or disability insurance. That will make sure you can take home at least up to 60% of your income, whether you get injured on or off the job. Now, Wiley's going to kick me because I told him I was only going to be 7 minutes. He knew it was going to be longer than 7 minutes because when I get to going, I can go for hours. I love to run my mouth. Ask my wife. The next time a review may be really important for you is if you have children who are moving out on their own. Well, why do I say that? You may be able to tell them, hey, kid, you're moving out on your own. Let me do this. Let me give you some money for your college funding out of my life insurance. Let me fund your college. Or, let me fund your college out of your own life insurance. Oh, you want to buy a house? Well, when you were born, I bought you a cash value life insurance. You're 30 now. There happens to be $28,000 which is 20% of a $100,000 house, there's your down payment. Now you don't have to get an FHA mortgage, and you don't have to pay as high of a mortgage monthly payment because you did a traditional 20% down. So you'll also want to review if you're changing job status, and that includes a new job or promotion. Why? Because it's likely that your income is going to change. And when your income changes, the amount of protection or the lifestyle that you're providing has changed. So again, when you sit down with a financial professional, they should always ask you, if you go to them, I want $100,000 worth of life insurance. They better, if they're worth their salt, say, how'd you come up with that number? As opposed to, okay, $100,000 worth of life insurance is this. Now, if they work inside your budget, yeah, that's cool, right? You might say, look, I'm only trying to spend, or I only have available X amount of dollars. Okay, well, inside of your budget, X amount of dollars would get you this. But they should still go through that to explain and verify to you, what you should have. Right? Now, the next thing you should do if you review is if you're experiencing significant changes in assets, including losses, gains, or an inheritance. So, prime example, the market is getting beat up. People just lost a bunch of money in crypto. You may want to review your insurance because you're having losses. And there are taxable events and losses as well. You can't always write off certain losses, but there's ways around them. Now we're getting ready to wind up and wind down here. I'm almost finished. So, beyond these standard events, a review will also establish a place for life insurance cash value in your overall portfolio. Okay? If you'll notice, I said it will establish a place for life insurance cash value in your overall portfolio. So that's your overall portfolio, and that's going to be cash value that is generally necessary in those situations. It's almost always necessary. And who doesn't want to build cash? We're always talking about things like investing, etc., etc. Like I said, a gentleman that I follow by the name of Green Gorilla posted a video earlier last year about equities and mutual fund ownership by race from quarter 4 1990 to quarter 4 2020. And African Americans went from a walloping 1% of ownership in equities, which is stocks, bonds, ETFs, and mutual funds. We owned 1% in the end of 1990, and at quarter 4 2020, or the end of 2020, we, as a whole, Black America still owned 1%. I talk to many Black Americans who say, hey, I'm investing. I want to invest. Well, somebody's lying here, because these are federal government numbers. FINRA, the Federal Investment, Federal Investment Regulatory Authority, wouldn't follow those numbers, and they update it. So from quarter 4 1990 to quarter 4 2020, a course of 30 years, we changed from 1% to 1%. So are we truly investing, or are we just saying we're investing so that we don't have to have these uncomfortable conversations? Generally, especially when it comes to insurance, we get what's called porched. What does that mean? Yeah, I want the appointment. I'm ready. I want to talk about it. Then when it comes time, I knock on your door, you don't answer, or, I send you the Zoom link, you don't get on. Because you don't want to have that boring conversation about insurance, because so many agents have been taught to do an aggressive sale. They haven't been taught to help you to identify and protect your lifestyle. When you find out that it's really protecting your lifestyle and that you don't have to die in order to benefit from life insurance, otherwise we'll call it death insurance. Just like car insurance, if they called it what it was, first of all, most people don't even want to get car insurance now. But if they called it what it was, which is car accident insurance, because the only time car insurance pays out is if you have an accident. And that's regardless of if you have liability only or if you have full coverage, which most people don't even understand full coverage, and they don't have true full coverage, because true full coverage, actually, let me move this other mic because this other mic is about to fall. True full coverage actually consists of things like medical payments, loss of use, loss of sight, loss of income. These are options you probably don't know are available on your car insurance, but they are. There's way more than just comp and collision and limits of liability. But let me tell you how reckless, before I finish this review thing, let me tell you how reckless people driving around with liability only in car insurance are, and then they don't have life insurance. And I'm going to use some very vulgar language here. But when you're driving around with liability only car insurance, I'm going to use New York State limits of liability. That's 25, 50, 10. So that means 25,000 up to 25,000 per person in the accident. A total of up to 50,000 for the entirety of the accident. And a total of up to $10,000 for property damage. Now you got people who are driving around in Benzes and AMGs and Lexuses and Corvettes. That car's worth more than $10,000. You crash, it's totaled, you got to pay that $10,000. Let me give you an example. I'm driving, and my principal Charles is driving in the car with his wife. And then I get into an accident with them, and I have liability only. And they both get injured, and they both have to go to the hospital. And they both have broken bones. Well, the car insurance company will pay up to $25,000 for Charles's injuries and up to $25,000 for Charles's wife's injuries. But they're not going to pay anything for my injuries. I got to pay out of pocket for that. Now, this is why I said someone driving around with liability only car insurance and no life insurance is reckless as fees up. Well, why? Because that same scenario. Charles is driving his car. I'm driving my car. I smash into him last night. And last night I killed him, and his wife lived through the car accident. Right? No. In fact, last night when I got into the car accident with him, he died and I died. So we both died. So, luckily I had car insurance, 25, 50, 10. So the car insurance company is going to give his wife $25,000 as a death benefit. But because I had liability only and no life insurance, because, I ain't thinking about life insurance. Well, basically, I just said, fuck my family. They don't need protection. I'm going to drive around willy-nilly, and if something happens, they'll figure it out. Now, how reckless is that? But that's what many people do on a day-to-day basis. It's sad, but it's true. Now, they can come closer than close. Yeah. Now, you'll also want to address any newly desired legacy goals. What do I mean by that? Well, sometimes you may want new goals. Prime example, when my Uncle Paul died in 1997, my grandmother wanted to start a not-for-profit company for him. He said, I'll live forever. That's what they think, right? Kay, salute. Kay's in the building. What's going on, brother? Kay, Wally gonna fight me today. I told him I was only gonna be 7 minutes long. And I'm already almost an hour. I'm 50 minutes in. But like you said, Kay, once you get me to going, I could talk for hours about this stuff. And believe it or not, there's hours and hours and hours worth of content that you can go over this. Remember, like I said, the reason you want to do a review is because every 2 years, there's things that change. Every 2 years, there's something called continuing education. So every 2 years, and actually it's 2022, so I need to go through some more continuing education this year because my New York license is going to turn over on my birthday. you have to take at least 15 hours of continuing education. So there's new concepts and new changes. What's going on, Chaos? New concepts and new changes to all of this stuff every 2 years. Yeah, I probably should have posted this in all the Discords and stuff. I'm getting used to sharing out and all that good stuff. Don't worry. We're about to start having more people in the boxes. And salute to K. K was like, man, with the gems you be dropping, you should have over 100,000 people. But I told you, man, I don't talk drama. And sometimes, you know, this insurance stuff, it's really boring. Even I think it's boring. Look, I didn't even like my own video. And half the time, I watch my videos halfway through only because I recorded it and I hear myself making it. And, you know, I am very vain, but I'd rather y'all get this knowledge. Plus, my wife, she gets on me anytime I watch my video. She's like, oh, you're being vain watching your own stuff again? I'm like, no, I have to make sure the content is proper for, you know, the content consumer. But you want to address any newly desired legacy goals. So you might have some changes. You might get older, you know, certain things didn't change, but you might say, you know what? I want to leave some money to this new church that I joined. That's a new legacy goal. But the insurance policies that I have now are for certain purposes. You know what? I'm going to get a small policy that's going to leave the church $100,000. I know I mentioned the church. I am by no means religious. I'm not an atheist. You could call me agnostic. I don't confirm nor deny the existence or non-existence of that deity. Now, lastly, you want to evaluate the connections between your business and your needs as a business owner. Well, what does that mean? Well, you can actually use your life insurance as a retirement account through your business. There's ways that you can actually use your life insurance through your business as a tax write-off, because maybe your business pays for your personal life insurance. Like I said, there's something called COLI, corporate-owned life insurance. That's when a company owns the life insurance on you. So there's a bunch of different avenues and routes that we can use, ladies and gentlemen, that will get us there when you're preparing for your life insurance review. So again, make sure that, you know what, let me share this to, what else can I share this to? I guess I could share this to, I'll share this to my Twitter. Screw it, I'm not sharing it to Twitter. It is what it is. So there's a boatload of different avenues and things that you can actually do when you're reviewing your policy. Now, I want to share with you one more thing. Now, technically, I'm not supposed to share this with clients, but I like to underpromise and overdeliver. So we're going to overdeliver here, because it's tax time. So we're going to look at Ira contributions, right? Because a lot of people have money in places, and this is what I generally look at, and I tell people, hey, this is the tax triangle. So you want to look at things that are taxable, tax exempt or tax free, or tax deferred. So things that are tax exempt or tax free. So when you make a withdrawal from a tax free or a tax exempt source, you don't end up paying income taxes. Well, what is that? Muni bonds or municipal bonds, which are local bonds. There's also something called GEO bond, which is a government obligation bond. Again, I'm not going to talk about this stuff too in depth, because a lot of these are securities, and I don't talk investments unless we're having a face-to-face consult. So this is not financial advice. Again, this is just an illustration of concepts. Okay? But again, you have GEO bonds, which are government obligation bonds, and then you have muni bonds, which are municipal bonds. So municipal bonds will be with your state or local government. And if you withdraw from those are tax exempt. Also, a Roth IRA, when you withdraw from that, it's tax exempt. Now, Roth IRAs are not completely, they technically are tax deferred, because what happens is you pay into them with after-tax dollars, but the growth is what gets taxed. But that only happens at annuitization. The next step, let me make sure this is sharing properly. Hold on, is this screen sharing properly? It's not. Yes, it is. Okay. So the next step is permanent life insurance. Yes, permanent life insurance, when you withdraw the cash value from your permanent life insurance, why is it up here with 2 security products? Life insurance is an investment? Well, it is, but the bigwigs on Wall Street, which initially were just stockbrokers, decided that insurance agents were killing their business because insurance technically is an investment. So they lobbied to make it so that, and now they actually repealed that law, but they made it so that insurance agents couldn't call themselves financial advisors, right? And they made it so that stockbrokers could only call themselves financial advisors. And these are people who hold the Series 7, not the 6. A Series 7 license holder is a stockbroker. But because of things like the SIE and so many Ponzi schemes happening, FINRA has now allowed all advisors to call themselves financial advisors, because things like permanent life insurance, it's financial advice. So as long as you're a licensed financial professional, you can call yourself an advisor. Now, permanent life insurance, when you withdraw from that, it's tax-free. Now, isn't that pretty cool? Now, we're going to look at things that are tax-deferred. So when you're looking at things that are tax-deferred, they shelter investments from taxes as long as they remain in the account. So that's a 401k plan or a 403b. A 403b is basically a 401k that is from a nonprofit. Traditional IRAs, right? Then you have pensions. And then you have annuities. So these are all tax-deferred. And if you get the right financial professional, they can actually set up your annuity to be treated as an IRA. So when you make deposits into your annuity, it's a tax write-off. So you kind of get the double dip shebang for your buck, where in a Roth, you can't do that. Now, let's look at taxable accounts. So for taxable accounts, investors must pay taxes on their investment income in the year. Now, this is not something that I created. This was created by my company, again, Emeritus, right? But what are they calling this? This is for investors. Well, why is life insurance up there if it's not an investment? Because you'll hear a bunch of people, life insurance is not an investment. Well, it is, but you've been trained to think it's not. That's literally like saying, but never mind, I'm not going to make that equivocation. Life insurance is technically an investment, but we don't like to package it as such. Okay? But it's really your first investment and your most important investment. Now, taxable accounts. So, what accounts are taxable? You know what? I am going to share this with my bro because he was talking about a CD today and he don't know what he don't know. Bear with me there one moment while I share this. Text messages. Actually, we're going to send that to Amy. So there we go. Select. And we're going to send that to Anthony Harris. And Henry. Done. No, I don't want to do it like that. Okay, we'll do it like this. Bear with me 1 second, y'all. I just want to send this to my brother because he was talking some financial information with me today. Messages. Okay, so now we're looking at taxable accounts. So investors must pay taxes on their investment income in the year it was received. So that's things like CDs, which CDs are garbage. If you're going to get any kind of investment account, please don't do a certificate of deposit. An annuity will beat the hell out of a CD, and a CD is a perpetual. The interest rates on that suck. If you get a CD, you're basically saying, I don't know what the hell I'm doing, and I really don't want to gain money, but I think I do. Right? That would be like saying, I'll tell you what buying a CD is. Buying a CD is getting a Nerf ball and a Nerf basketball hoop and then dunking on it and thinking that you're about to go to the LA Lakers and dunk on LeBron James in a real basketball court with a real basketball hoop. It ain't gonna happen. Right? It ain't. I'm talking about the average person, not the guy who, oh yeah, well, you know, some people were good at college ball. Well, they ain't in the NBA. And most likely you ain't gonna dunk on LeBron James. If you haven't been practicing, you just gonna walk up on the court and think you're gonna dunk on LeBron James when he's been practicing and playing this sport for 19 years? Nah. So then what else is taxable? Money market accounts. So money market accounts and CDs are getting around the same interest rate. Your highest percentage yield of a money market account right now is with Marcus Millichap, which is Goldman Sachs. And that's a walloping 0.5%, or half of 1%. So to put that into kind of a range that you can understand, if you put $100 into Marcus Millichap, you have to let it sit there all year, and then by January 25th, 2023, your $100 would earn 50 cents. A regular bank account. Again, regular bank accounts don't earn interest. You know, they'll tell you, oh yeah, we earn a walloping 2%. You're not earning that 2%. I actually had the discussion. He was like, oh, with someone today. He was like, oh, Capital One got 2%. Yeah, that's with a minimum balance of generally $15,000 or more. And it has to remain there. See, that's the fine print that they don't show you. All they show you is, get 2%. Oh my God, this bank is giving 2%. Your average American ain't going to qualify for it. So stop the cap. Mutual funds. I can't say too much about mutual funds, but if you're really going to get a mutual fund in today's market, you should probably just get an ETF. It'll save you a lot of money. You can actually manage it yourself. Speaking of managing it yourself, I'm going to also show you guys about something called the self-directed IRA real estate, where you can take your IRA and self-direct it. But a lot of people don't. That's why people like me get paid money to do what we do. So you don't have to have that headache. Now, you'll also be paying taxes on your stock dividends. You'll also be paying interest on your corporate or your T-bonds, which is treasury bonds. And obviously, you'll be paying interest on your real estate. Now, you know what? Let's do this. Let's go to Google, because I want to show you high yield savings account. Just so you see. Marcus Millichap is the first one who pops up. Let's check NerdWallet. And then I'm going to hop off of here. So we're almost done. Now, NerdWallet says 7 best high-yield online savings accounts. Oh, what did I say? Marcus Millichap still is by Goldman Sachs. You'll get a walloping 0.5% interest. Right? Let's take a look at Discover, which is the next one. That has a 5-star. You get a walloping 0.5% interest. And that's a online savings account. There's also money market accounts. American Express, a walloping 0.5% interest. This one is a local credit union here to me in Connecticut. So if you Google yours, it's probably going to be different because it will be based on your IP address. But Alliant Credit Union gives a walloping 0.55%. The Lending Club, wow, they give a whopping 6.6%, but with a minimum $2,500 balance. And again, if they're going to give you 2%, and let's actually check this out. What did he say? Was it Capital One? Capital One savings account. Let's actually Capital One money market, because that's got to be what he was talking about. Here we go. 4% APY, and that's from current. That's a ad. You're never gonna get 4%. So let's see here. Let's look at Capital One. Because you don't know what you don't know till you know it that you don't know. So important details about your 360 money market account. Let's see. Initial deposit. So you can open the account with any amount. There's no minimum to open it. The minimum balance to obtain the APY. So it says that there's no minimum balance required to obtain the disclosed APY. The rate information. The interest rates and annual percentage yields are variable, meaning we can change them at any time. If your daily balance is less than $10,000, you'll earn 0.2996% on your entire account balance, which adds up to an entire annual percentage yield of 0.3%. So I don't know what he was talking about 2%, because right here it says 0.2%, which is less than 0.5%, right? That's 20% of 1% versus 50% of 1%. Or this one, you're getting 30% of 1%. So for every $1,000 you have in there, you're going to earn $3 a year. I'm sorry, for every $10,000. Nah, bro. You don't want that. So at any rate, that's going to be it for today, ladies and gentlemen. Make sure y'all hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Also, I work with a company called David Allen Capital. I don't talk about it too much, but if you're interested in getting up to $25,000 in a business loan almost instantly, email me and we'll go again. She said, and that ain't ish to gain. It's not, but it sounds nice, right? Because they'll hit you in the head like, yeah, we'll give you 2%, but those high percentages are for what's called high net worth individuals. So you don't read the fine print. All you see is 2%, and then you look and it says no minimum balance to earn the APR. Then you read the rest of the fine print. Oh yeah, but if you keep less than a $10,000 daily balance, you're only going to get 2.996%, which is 30% of 1%. So you're only going to get 30 cents on $100. Doesn't make any sense. It is what it is. Like I said, I'll speak to him about that, because if I am willing to say it when you're not around or not in earshot, trust me, I'm the type that will say it to your e-face or to your face. I've been shot 5 times, so nothing really scares me. You know, it is what it is. But at any rate, ladies and gentlemen, it's your boy, the insurance junkie, your fiduciary fella, the all-star advisor, Alonzo Hall. And I've just whapped and tapped on your head with some cash commandments and some ADH wealth solutions. So, with that being said, if you'd like to contribute to channel growth, if you'd like to purchase life insurance directly up to $1 million with an instant decision and no medical exam, or if you'd like to schedule a one-on-one appointment with a licensed financial professional, the links are in the description. Lastly, share, 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 and share again. Somebody can benefit from this. And finally, wipe ass. Work in progress every day and see success. Wipe ass. Work in progress every day and see success. Wipe ass. Work in progress every day and see success. And finally, ladies and gentlemen, remember, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Salute. Mm-hmm.